Hi everyone and welcome to today's morning report. Chart appraisals on Wednesday the 14th of June with me, Rich Market Analyst at Handset Markets. We've got a relatively stable market today, although the equity markets are higher. What we are seeing is Forex markets which are basically sort of consolidating. You've got the euro basically flat, sterling is chopping around a little bit. You've just had wage growth data out from the UK which significantly disappointed, so an early rebound in sterling has fallen away, but yeah, generally speaking the markets are fairly settled ahead of the Fed, and the Fed comes tonight at 7 o'clock UK time. It's expected, fully expected to hike interest rates by 25 basis points, but the real interest will come in how the Fed deals with the balance sheet reduction going forward. Also factoring in the declining inflation phase that the US also finds itself. So economic projections will be interesting, the dot plots will be interesting, and obviously what Janet Yellen has to say about balance sheet tightening. So yeah, there's a lot going to be taking the focus today. Now what we have at the moment is a phase of sort of dollar just dropping away again in the last few days, but that comes as this Treasury yield spread or the yield curve continues to flatten off, and that's represented here by the 2s to 10 spread. The 2s have been rising in the last few days as the market's sort of playing out towards that rate hike, but the 10s has not really been picking up, certainly well down from its sort of highs of 2.64 back in December. And that is reflective of the lack of inflation that is in the US at the moment. Now we have got US inflation that is actually announced today on the CPI. CPI is expected. Where is it? Where are we looking? Sorry, I lost it. Here we go. CPI 130 expected to drop back on the headline to 2.0 and stay at 1.9% on the headline. Sorry, on the core. So 1.9% on the core, but the headline dropping away. That would be a third month in a row of dropping headline inflation there. You've also got retail sales at 130 plus 0.2% for the month expected, which would be around about sort of just above 4% on the year-on-year data. But the Fed this evening is the real focus. You've also got the EIA oil inventories, which will be interesting because we had the API inventories yesterday, which showed a surprise inventory build, which hit the oil price early this morning. 2.5 million is the expectation there on the crude stocks. Distillates and gasoline will be interesting as well, but certainly the crude stocks the main focus there. But the Fed this evening will be what the traders are looking out for. Now that takes me to my chart of the day, which is the dollar CAD. Now what we have seen is the Canadian loonie strengthening quite significantly in recent days as the expectation or sort of outlook from the Bank of Canada has sort of turned a little bit more interestingly hawkish, given the sort of growth data that we had out recently. Noises out from the Bank of Canada suggest that perhaps moving towards possibility of even a rate hike, which is really interesting. Real shift in sentiment there, or sort of guidance there. And what we have seen is the dollar CAD falling sharply as the Canadian loonie has strengthened. Now that sharp fall has broken this uptrend, which is a 4-month uptrend since February, but also we're now back to below that old sort of trend channel as well, so a real change in outlook there. And if we see a sort of close below 132 figure, that would be sort of below a pivot line, which would arguably reopen the 130 area of these lows from January, February. So a real change around in outlook there on the dollar CAD. What we have got is momentum indicators, which are now strongly negative, with the bear kiss on this on the MACD lines, the crossover on the stochastics, the RSI falling over. You could argue a little bit stretched on the near term, so maybe a little bit of a technical rally possibly due on the CAD, on the dollar CAD today. In light of the fact that we've also got the Fed meeting tonight, that would be interesting. But certainly it looks like the market is selling into, will be now selling into strength. So you'd look at this hourly chart, you'd say initial resistance 32.45, then 32.85, Just above that, you've got the 33.85 key resistance now. So any sort of rallies, unwinding moves are likely to be sold into on the dollar account. So I wish you good luck in your trading today, and I will speak to you later. Thank you.